ETH has quietly trended sideways over the past week. The market cap now stands at $84.27 billion, with $980 million traded on exchanges in the past 24 hours. The Ethereum Enterprise Alliance (EEA), which aims to nurture and enable further Ethereum-based technologies, recently announced 83 new members. The Enterprise Ethereum Alliance is a non-profit corporation that connects Fortune 500 enterprises, startups, academics, and technology vendors with Ethereum subject matter experts. While the name Enterprise Ethereum Alliance is a trademark of the Ethereum Foundation, it does not create a partnership, agency, sponsorship, endorsement, or any other similar relationship between the Enterprise Ethereum Alliance and the Ethereum Foundation. Porsche has also been testing the Ethereum blockchain, in collaboration with XAIN, a Berlin-based startup. XAIN won the first Porsche Innovation Contest on the subject of blockchain in the summer of last year, beating over 100 other applicants in the process. Following the contest, interdisciplinary teams from across Porsche worked in collaboration with XAIN over the course of 3 months to develop and test applications. Blockchain was introduced into the Porsche Panamera using an energy-efficient mining process from XAIN. In addition, Porsche is currently working on further applications for the technology, including in the areas of charging and parking. However, transactions per day and transaction fees are both down sharply after peaking in late December and early January. This pattern largely follows the price of ETH itself. Transactions on the network will likely increase dramatically when price volatility returns. The Ethereum network hash rate and difficulty are pushing new record highs, despite the hard fork in October 2017 decreasing the block reward from 5 ETH to 3 ETH. Mining profitability is currently approximately 69% down from peaks established in both June 2017 and January 2018. Both of these time periods were marked by record price levels and peaks in transaction fees. A major driver of the network has been the initial coin offering, ECO. According to ECO Tracker Coin Schedule, almost $4 billion was raised in ICOs during 2017. Over half of that figure has already been raised in 2018. 67 ICOs have raised in excess of $2.7 billion. The communications sector has led the charge thanks to Telegram's $850 million round 1 pre-sale. These statistics exclude Venezuela's Petro Eco, which has not been able to be verified. The Petro tokens remain in a single address. In an effort to combat fraud in the nascent eco-funding space, the Security and Exchange Commission has begun to crack down. As many as 80 subpoenas have been sent to companies and individuals recently, according to a former lawyer in the SEC's Enforcement Division, Nick Morgan. ICOs are also prone to hacking, with an estimated $400 million stolen since 2015 according to auditor Ernst & Young. In a rare twist of fate, a hacker recently returned 20,000 ETH stolen from the Coindash Eco in July 2017. The Israeli startup planned to raise capital by selling its own digital tokens in exchange for ETH, but just 13 minutes into the token sale an attacker hacked the project's website and changed the advertised wallet address to a fake one. The unknown perpetrator originally diverted 43,000 ETH. A second driver of network used is the success of decentralized applications (DApp), according to DApp tracking website dappradar.com. The two most used Ethereum-based apps over the past week have both been decentralized exchanges. The sector accounted for more than 72,000 ETH in transactions. A new DApp called CryptoCountries, a smart contract allowing users to buy countries and compete for ownership, made its developer $500,000 in 24 hours. Ethereum and CryptoKitties had the highest volume over the past week, and operate in the casino and game categories respectively. The DApp browser MetaMask.io was recently updated with a new UI, and has had over 1 million installs according to Joseph Lubin, the Ethereum co-founder and Consensys founder. Lubin was recently on CNBC, where he further discussed the demand of dApps and Ethereum. Exchange-traded volume is led by the Bitcoin, BTC, Tether, USDT, and US dollar, USD, pairs. The majority of trading has been conducted on OKEX, Binance, Bitfinex, and GDAX. The Korean won, KRW, trading pair holds a premium of 1.6%. The over-the-counter, OTC, exchange local Ethereum averaged 200 ETH per day in transaction volume over the past week. In comparison, local Bitcoins averaged 5,753 BTC worldwide in the past week, according to CoinDance. Traditional OTC desks often require a minimum order of between $100,000 and $250,000, whereas these peer-to-peer marketplaces have no minimum order size. Technical analysis has been essentially trendless on high time frames, since posting a record high in January. The overarching trend continues to be bullish, and a return to this trend can be confirmed using Ichimoku Cloud moving averages. Further background information on the technical analysis discussed below can be found here. The Ichimoku Cloud metrics on the weekly chart, with singled settings, 10/30ths, 60/30ths, for quicker signals, remain strongly bullish. Price has stayed above the Kijun, or mean, for 7 weeks. Bounces like this are strongly suggestive of momentumless bullish continuation. The Ichimoku Cloud metrics on the daily chart, also with singled settings, are mostly bearish, excluding the TK cross. The Tenkan T and Kijun K lines have recrossed bullishly, suggesting bearish momentum has begun to wane based on cloud probability. Should bullish momentum exist on a near March 10th, price will likely move upward through the Kumo twist. The 50 EMA is also currently acting as resistance, around $893. This zone will typically be used as a stop-loss zone, based on the fractal stop. The Ichimoku Cloud metrics on the daily chart, with doubled settings, 20/60ths, 120/30ths, for more accurate signals, are neutral based on the position of price in the cloud. A short entry opportunity would be indicated by the price falling below the cloud, when the cloud itself is bearish. Price will likely move to the mean, Kijun, at around $994. A long entry would be indicated when price moves above cloud, as the TK cross is already bullish. On the 12-hour chart, Bollinger Bands, B bands, are the tightest they have been since March 2017, when a break in the bands led to an explosive bull run. B bands measure volatility over time, and attempt to predict the resolution of consolidation. The volatility channel between the upper and lower bands will squeeze during low volatility and expand during high volatility. The position of price relative to the median, above or below, helps to predict the bias of the breakout. On the 4-hour chart, the 50 EMA and 200 EMA cross remain bearish. A long entry would be indicated by a bullish 5200th seam across. Volume has also decreased dramatically since the beginning of February. A large increase in volume will likely confirm the direction of the breakout. Lastly, ETH/BTC on the daily chart has fallen below the 200 EMA and dropped below cloud, both indicating strong bearish momentum. Price has also formed a bearish head and shoulders pattern, currently breaking support. The measured move, 1.618 Fibonacci extension, and monthly pivot all point to 0.050 BTC, a strong psychological support as well. Conclusion: fundamentals continue to show an increase in network experimentation and awareness, despite the drop-off in transactions over the past month. Overall network use has recently been driven by dApps, mainly DEXs, and ICOs. Technicals are neutral, but leaning bullish with no momentum. B-bands and volume on high time frames are set to break bullishly around March 10th. A long entry is warranted as soon as there is a close above the 12-hour B-band, with an expected target and retest of the all-time high in December.